So why are home prices not coming down? I mean, if all we hear about is the rising mortgage rates, why is this not affecting the value of my home? And if you saw our July market update, you may have caught on to why prices are actually rising, amid all of this volatility of rates. But how high have they risen in the past few months? So, really should be no surprise that end of last year, was where we saw our market shift dramatically. We saw a huge halt from buyers and sellers as just there was so much uncertainty out there. But as rates have continued to fluctuate, many buyers were either just priced out of the market or were holding off, hoping that prices would drastically fall. But it's been 6 months, and it's clear that January was the cheapest we saw home prices, and they are now 9% higher. And let me explain a few reasons why. One is supply. With a limited number of homes for sale, sellers still have a distinct advantage. They understand that potential buyers have few options, which creates competition and drives prices up rather than down. And this imbalance allows sellers to maintain their asking price even in the face of higher borrowing costs. The limited supply forces buyers to also compete for available properties, empowering sellers to hold firm on their prices. And number two, sellers are willing and able to give concessions and buy downs. Homeowners who are in a position to sell are still sitting on a lot of equity. And an overwhelming majority of them have mortgage rates at 5% or less, which isn't super motivating for them to move the property quickly, with rates being around 7. So that gives the seller ability to negotiate for top dollar while enticing buyers with incentives such as concessions or buying down their rate. But nevertheless, most sellers do become buyers. In a lot of cases, sellers are reluctant to sell, lest they need to, given that they'll have to make up for it on the purchase. And number three, less buyers out there, but a lot more qualified buyers. And these buyers understand how recessions impact the market. A big contributing factor is just the perception of real estate as a long-term investment. Home buyers and investors often view housing as a stable and appreciating asset over time. So despite higher rates, buyers recognize that home ownership can afford long-term financial benefits, provide a hedge against inflation, and gives them somewhere to stay. And this perspective can mitigate the immediate impact of higher costs, as buyers remain motivated to enter the market and are willing to pay the prices to secure a property, with the expectation of value appreciation and their ability to refinance when rates do come down and substantially lower their current mortgage payment. So there may be less buyers in the market today, but a large majority of those are very qualified buyers. And contrary to common misconception, the housing market often performs pretty well during recessions. Typically, recessions mean that there are lower interest rates. You've got more of a relaxed monetary policy. So again, you can refinance in the future. And because of the scarcity of supply, no real motivation or need from sellers to drop prices or having higher qualified buyers within the market, it's just created a situation where home prices tend to remain stable, and again, even continue to rise, as interest rates are higher than normal. So that is why home prices are sticky. It's a super complicated issue, something like we haven't seen around in a long time, but we like to keep informed on what's going on. And if you have any questions, please feel free to reach out.